The 10-year yield dropped below 4%, and it looked like it might hold. Hello, welcome back to RVM. My name is Harry, and I want to talk to you about why that matters to you, especially if you own a home or if you're looking to refinance or even buy and sell. That can have a huge impact on mortgage rates as we move forward. So a couple of things that I want to point out over here. First of all, it looks like one of the Fed board member, Bowman, expects two more interest rate cuts this year. Now, that's huge because if you look at where interest rates or Fed rates are right now, they're at about 4.25%. Well, by the end of October, about October 28, 29, we could be looking at about 3.25%, 4%. But by the end of the year, if those two Fed fund rate does happen, then we're looking at about 3.5%, 3.25%. Now, Jim DeMare, who's the co-president of Bank of America, believes that there's going to be 3 rate cuts. So there may be another rate cut coming early next year, around maybe February or March, and that would put Fed rates down, the effective rate down about 3.25% to 3.5%. So that's huge. And what does that mean? Well, the 10-year yield has been dropping quite significantly. And we are, as of the date of this recording, about 3.976% on the 10-year yield. Now, remember that mortgage rates move with the 10-year yield. So the more that the 10-year yield drop, theoretically, the mortgage rates should be dropping as well. And that is exactly what has been happening. So we look at the 30-year fixed average mortgage rates according to the Federal Reserve Bank, and we are at about 6.27%. However, according to Mortgage News Daily, we've actually dropped down to about the 6.1% yesterday. So that's big news. And the more the 10-year yield drops, the possibility of the mortgage rates dropping as well. Now, one of the reasons why I think the 10-year yield will continue to drop as the Feds drop their rates is because, remember, the Fed rates does have an impact on CD bank rates as well as money market rates as well. So a lot of people that are investing in these securities, they're going to look to make sure that they can have a bigger return for a longer period of time. And really, they're not going to find that unless they go into the 10-year Treasury bonds. And that's why you see those Treasury bonds actually increasing in prices while the yields are decreasing. It has an inverse effect. So the more that happens, and the more that there is also some insecurities about the economy because of the government shutdown, then those yields will continue to move down, and then you have the mortgage rates that are supposed to be mirroring the 10-year yield rate. However, not mirroring, because there is a spread, and that's what I want to get to. The government shutdown is, to some extent, keeping that spread wide between the 10-year yield and the mortgage rates. And one of the reasons why is because, remember, lenders do control spread to some extent, right? And so a lot of that has to do with how they feel about the economy. Well, right now, the government shutdown is not making a lot of banks, a lot of lenders feel too good. So they're keeping that spread a little wider to ensure that they don't lose out. At the same time, if the government does open back up, then I think that spread can actually start contracting. The possibility of us seeing mortgage rates drop below 6% will be far more likely. I think that's what's going to happen. Like I said, we are right now on day 16 of the government shutdown, and I don't think it's going to happen anytime soon, the way things are holding out, although it does seem to be some pressure on one side of the political aisle, and all there's needed is just 5 votes. So once that happens, I think we can start seeing government open back up and some more certainty in the economy, and that's going to have a huge impact on the 10-year yield as more people start looking to securities that are going to be able to give them a higher rate of return as the Feds look to cut their rates more and more. I think a lot of that is already being factored in. So that's all for now. I hope you got some value out of this. And if you did, please hit the like button and subscribe. I'd like to get some more information out like this to you. And you have a great weekend. I'll see you in the next video.